Mark owned a successful manufacturing company, $25 million in annual revenue, a team of 60, and clients across the country. But every year, like clockwork, he watched $400,000 disappear into commercial insurance premiums and even more into taxes. Even worse, the policies weren't covering his real risks: supply chain disruption, cyber threats, employee lawsuits. He felt stuck, overpaying for someone else's rules with no protection he could count on and no value he could retain. Then one day, his accountant asked if he had ever heard of a captive insurance company, and he hadn't. That conversation changed everything. The problem is that traditional insurance keeps you powerless. Mark thought he was doing it right, checking the boxes, buying policies, trusting the carriers. But every year, his premiums climbed while his coverage shrank. He had no control, no equity, and no real say in the process. Worse, he was insuring risks he didn't need and completely exposed to the ones he did. No control, no refund, and no leverage. And when he did decide to file a claim, the red tape was just endless. The adjuster stalled, the payout was delayed, and his premiums still went up the next year. He was playing defense with no ability to protect the businesses he'd spent 2 decades building. So what was the shift? That's when we helped Mark set up a captive insurance company. He didn't just buy insurance, he built his own private insurance company with shared risk. I'm Todd Villalaria, a 30-year attorney with a master's degree or LLM in taxation and one of only 100 board-certified experts in estate planning and administration. I'm the founding partner of both my law firm, Wealth Planning Law Group, and our new fractional family office, Fountainhead Global, that helps the top 4% of entrepreneurs who generate gross revenue of $1 million or more annually with an average revenue of $20 million, take control of risk, reduce their tax exposure, and build strategic structures that create lasting wealth. When I come across someone who's paying 6 figures of pointless insurance premiums each year, and I tell them that they can have their own insurance company, they think I'm crazy, but it's true. Instead of throwing $400,000 into the void, Mark was able to write premium checks to his own captive and deduct them, covered risks that traditional carriers wouldn't touch. It built up a reserve of protected, retained capital, and it reduced his income taxes since the captive can take in up to $2.85 million of premium tax-free. And when COVID hit, while others waited months for carrier responses, Mark's captive paid out in weeks because he was in control. Here's what that gave him and what a captive can do for you. Tax efficiency premiums are deductible, reserves grow in a tax-advantaged structure, and you control the capital. Plus, it provides customized coverage. No more hoping your risk fits their model. You insure what matters most to your business. Plus, there's profit retention. If you don't have claims, the profits stay with you, not the carrier. Asset protection is structured correctly, as a captive adds a layer of insulation around your core businesses and assets. You can have legacy integration because captives can be tied into estate and business succession strategies to pass on wealth with minimal loss. Captive insurance companies aren't for everyone, but if you're paying 6 figures in premiums and managing real business risks, this might be a structure that changes everything. Let's find out. Book a complimentary Wealth Optimizer audit. We'll evaluate your current coverage, identify eligible risks, and show you exactly what a properly structured captive could do for your business. Click the link next to this video. Don't just manage risk, own it.